Welcome to holisticinvestment.in YouTube channel. We help individual investors like you to take a right financial and investment decision.
Do you know what are the worst one-day fall or one-day crashes in the history of Sensex? What kind of impact it had on the portfolio of investors? As an investor, what should you do during such market crashes? Hi, this is Ramalingam from holisticinvestment.in. We help individual investors like you to take right financial and investment decision. Let us first understand what is a stock market fall or stock market crash. When the stock market Sensex level comes down, then it can be considered as a fall. If the fall is more intense, then it can be considered as a crash, especially if the fall is more than 20%, more than 10%. If it is in double digit, then it can be considered as a crash. Every day market is going up and down, but suddenly one day the trend can reverse and there can be a huge fall, right? That huge fall all of a sudden happens. It can put us in trouble. Our portfolio can have a huge one-day loss. That is why investing for long term helps. When you are facing such a huge market crash, don't press the panic button. Take one step back. Just relax and see what is happening. Don't get carried away by the noise that is happening in the market. Just relax and remember, even worst market crashes and even the highest peak has just passed over in the market. So this worst market crash will also pass. That mindset is what you have to create. This too shall pass. This is the mindset is what you should have when market actually crashes. Before going into how you should respond to the situation, first let us analyze the facts on what are all the major crashes that has happened. Let us take the last 20 biggest Sensex falls or crashes. Let's take that data, analyze, and get some insights what we can do. Like we have to understand, but before that, let us dissect the data and understand the insights. The data of the biggest 20 stock market falls in the history of Sensex, right? So what we can infer from this data? What is the most important takeaway from this data? That is something we have to understand, right? If you look at it in 2020 itself, there are 4 highest falls, right? 3 in the month of March and 1 in May 2020. And if you look at in the history in 2001, there is fall. There are falls. And 2002 and 2003, there is no fall. 2004, there is one fall. 2005, there is no fall. 2006, there is a fall. 2007, no fall. 2008 and 2009, there is a fall. 2010 to 2014, right? 5 consecutive years, there is no major fall. 2015, there is a fall. 2016, 17, 18, 19, 4 consecutive years, there is no major fall. In 2000, there are 4 consecutive falls, which I have told you, right? So there is no set pattern here. How the market is falling and what way market will fall, how intensely market will fall, there is no clue, right? So it clearly says it is not easy to predict the market fall, or I would go ahead and say market fall is something which is not at all possible to predict. 2020 fall, no one could have predicted. Similarly, in 2000 or 2008, when there is a fall, market went down heavily, but no one could have predicted that such falls. And intensity of the fall also varies. At times it is 5.85% is the lowest to fall. 13.15% is the one day major fall. So intensity of the fall also varies, and frequency, whether it is going to come in four major falls. So it came in. So in what way it's going to come? We are not sure. So it is not possible to predict either the frequency as well as intensity is possible to predict. So what should do as an investor? Right? That is what matters. Important point as an investor you have to remember is don't panic. Or one day fall, one day our mind acts because we are tuned that way. We are programmed that way. When there is a negative news, we get a panic. Right? So don't press the panic button, but go one step back and think about the situation. Don't react to it immediately. Because when you get panic, it triggers your emotion. When it triggers your emotion, there's a high probability we may end up taking a lot of wrong decisions, which will make us regret later. So when there is a market crash, don't try to react by getting panic. So avoid becoming panic, become more calm and composed. Be a contrarian. Be a contrarian is something very easy to say, but it is difficult to practice. Remember, you are creating wealth for long term. You are not investing your short-term money in stock market. You are investing only your long-term money in the stock market. When you are investing for long term, during your investment phase, when the market falls, you have to see that as an opportunity to buy more units or more shares at less money. Right? The same money which you would have invested before the market crash, you would have bought only less units or less shares because market has fallen. Right? You are able to buy more units and more shares. You have to see this as a sale that is happening in a mall. When a sale happens, goods become very cheap. Similarly, you can buy shares or units at a discounted value during market fall. Make fall as an opportunity. This is the way to become a contrarian. Next, even before the crash, when you are investing, buy only such investments where you have got strong conviction. To have strong conviction, you have to buy in fundamentally strong companies or in fundamentally strong mutual fund schemes. After doing thorough analysis, you check on the sustainability, you check on their long-term performance, you ask all the questions, right? When you ask all the questions and buy, you will have strong conviction to hold even during a market fall, market crash, because you have done a thorough analysis. Without doing thorough analysis, just you simply follow the trend, simply follow the noise that is happening in the market. Then when the trend reverses, you will be worried because you didn't do strong analysis. There is no strong foundation. During market crash, what makes you stay the course is having strong conviction. What helps you get strong conviction on your investments? Investing in fundamentally strong companies and strong mutual fund schemes. Otherwise, you will be in a trouble later. Right? So during market fall, don't invest in any speculative calls. Right? You have to stick to your goals. When you are sticking to your goals, you will not have a problem with market crash. Because if you are sticking to your goal, if your goal is long term, then you will invest your money in stock market. So when the market crashes today, you are going to achieve it later. You need not worry about it because you have got a long term goal. Market is volatile only in the short term. That's fine. And when you are investing for short term, you have a short term goal. You will not invest in stock market at all in the first place. So when the market crashes, you are not worried. So if you are sticking to your investment goals and doing it, you are not worried. If you are speculating your short-term money in the stock market, then you should be worrying, right? So speculators should definitely worry because they are not investing based on their goals. Being an investor, you are investing based on your specific investment goal. You need not worry about it. Then during market crash, remember, market crash can happen on one single day or in bits and pieces also. We have seen that, right? In March 2020, market crashed for 4 times. In 2000 and 2001 also, market crashed in bits and pieces. When such a thing happens, we are not know like whether the next after the fall market is going to recover or after the fall market is going to fall further. We don't know. At times people want to play smart and they think after the fall, immediately they withdraw their emergency reserve and put it in stock market to capitalize on the market fall, but subsequently market falls again. And when there is an emergency, you don't have emergency money, you are inviting trouble. So that is why he says stick to your goals. Based on that, invest only your long-term money, invest in stock market. Short-term money, don't invest in stock market. Fifth lesson is here, invest only for long term. Right? If you look at between 2000 to 2020, market has gone up. But if you zoom and see in the last 1 year, last 6 months, last 3 months, or any period of 6 months or 3 years, market has got a lot of volatility. In the short term, market will be volatile. In the long term, market is bullish. This is a permanent outlook for the market. Right? Short term, volatile. Long term, market is bullish. Remember this basic outlook, right? Zoom out and see, don't zoom in and try to encash the market. So when you zoom out the long term, it is easy for you to make money. So invest your long-term money in stock market and remain invested throughout. Because you are investing for long term, remain invested. If you are discontinuing your SIP, if you are withdrawing your SIP because market is coming down, then when the market recovers in the long term, you will regret, okay, I should have continued my SIP, I should have withdrawn from my equity. You will regret. Compounding happens in the long term. Don't disturb it unnecessarily by withdrawing, right? So remain investors, stay the course. To stay the course, having strong conviction is something very much important. Market most of the times creates an illusion that it is easy to make money in the stock market. I can follow the trend and make money. It is easy to make money in the stock market, right? When the market is bullish, when there's a bullish trend, people try to believe these kind of things. It is an illusion. Suddenly one day market crashes. There's one huge fall, 13% fall in one single day. Then suddenly market falls and all your money you made so far in the last 2 years, 3 years, you may lose in one single day, right? I have seen a lot of suicide news, people losing huge money and committing suicides during these kind of one-day falls I have seen. So that way, don't borrow and invest in stock market. If you have your own money, then invest for long term. Don't try to trade or take speculative calls by borrowing. Then you may incur a huge loss. It is a surefire way to destroy wealth. If you want to create wealth, don't borrow and invest. Invest only for long term. You have understood the basic lessons, what you have to do during your one-day market falls. Now tell me, will you act out of emotion or will you take a lot of rational, logical decisions during next market fall? Please share your feedback in the comment section. Right. So far, if you have acted out of emotions, try to be more logical and act more rational during next market fall and invest only for long term.
If you have any questions related to this or any other investment options or related to your financial goals, feel free to book a free appointment with our financial planner. The link to the free booking is given in the description below this video. Also, will you be interested to attend insightful investment webinars, then feel free to register for our upcoming insightful enlightening investment webinar, and it is completely free. The registration link for the upcoming webinar is also given in the description box. If you like this video, please give a thumbs up. Also share it in your social circle. If you are not subscribed to our YouTube channel so far, please subscribe now. Bye.